David Schwartz just sat down for another interview, and this time he's spilling the beans on Interledger Protocol, XRPL, USD, and what's cooking in Ripple's pipeline. I'm ready to jump into these clips, add some extra layers for you, and honestly, let's just enjoy dissecting what David's throwing at us. Listen to this.
The theory behind Interledger it's really interesting. I think it's an idea that was way ahead of its time. But let me tell you the way I explain the concept behind Interledger. Imagine that you and I have some way we can settle funds. Maybe you trust me to owe you money. Maybe I already do owe you money. Maybe you owe me money. Maybe we both have accounts on the XRP ledger and we can move XRP around. And I like to hold XRP and David holds a whole bunch of XRP. Or we have some way we can settle. It doesn't matter what it is. And that's such that if somebody gives you money, I'll be willing to make an outbound payment for them. Or if someone gives me money, you'll be willing to make an outbound payment on any system that you have the ability to make it out. Maybe it's the Bitcoin blockchain, maybe it's the XRP ledger. It doesn't matter. It doesn't matter what it is. There's some way, because you and I have some relationship between each other, whatever that is. Maybe you're holding a bunch of my money already. Whatever it is, it doesn't matter. And I can make outbound payments on several different things, and I can make inbound payments on several different things, and so can you. So you and I can advertise the fact that we have this relationship. But I can say, hey, you can give David Bichiri XRP, and I'll make a Bitcoin payment. Or you can give me XRP, and I'll make a bit, whatever. We have some way to settle. Interledger is a system where people can advertise these settlement relationships. They can connect them together to form payment streams, and it uses cryptography to guarantee the results. And it doesn't require any trust that doesn't already exist. So, for example, suppose I'm willing to let you pay me by making David Bichiri owe me money. All right. If I want people to pay me, I have to have some way for people to pay me. There has to be some way that they can deliver money that I'll accept. And let's say that David Bichiri already owes me a bunch of money. So if you make him owe me money, it reduces his debt. Let's say I already owe a bunch of money. So you making him owe me money reduces my debt to him, right? And so if I trust him to be holding my money, then all you need is a signed statement from David Bichiri that you paid me. And that's just as good. Right? Like if my bank tells me that you paid me, that's just as good as paying me. Because if I tell you to pay me, if I tell you to send money to my bank account and my bank says you did, I can't then say, no, you didn't pay me. Right? And so it leverages the only existing trust relationships to make payments. And it doesn't care what the underlying method by which the funds are delivered is, as long as the relay points can support cryptography. So if you have somebody somewhere in the Interledger network who you trust to hold money on your behalf, that enables that person to provide cryptographic guarantees to everybody else. And that's all you need. And it does some incredible things. So for example, it solves problems that are very difficult to solve. So one problem that's very difficult to solve is what we call the free option problem. So let's say I owe David Bichiri $10 and someone says, hey, I'll make that payment for you for 3 XRP. I can wait and watch the price of XRP. And if it goes up, I don't take that offer. And if it goes down, I do. So you have to give me some time window in which that offer is valid. And so what you would want to do is either charge me for the quote, but then I might want to get 10 quotes and compare them. But if I'm paying for those 10 quotes, then I don't want to get 10 quotes. So you might make the quote only valid for a short period of time, but then I run the risk that I'll take the quote too late and you'll just give me a shitty quote so that even if the rate gets worse, you'll still right? The free option problem is very painful. Interledger solves the free option problem because it allows you to break. It's the same way the internet solves the lost packet problem. You can break the payment into pieces that are so small it doesn't matter if they're lost. And you can investigate paths to see which paths are giving you the best rate and then send more. You can actually stream money down the best paths. It's a really cool protocol, way ahead of its time. Wasn't very successful, as it turns out. I think part of it being because it's ahead of its time.
Look, the amount of mental firepower David Schwartz is working with is just wild. And honestly, this man's intellect is on a whole other plane. He's easily among the most gifted cryptography experts walking the planet today. Pull David out of this entire journey, and let's be real, the XRP ledger would have stalled out ages ago. And yo, here's a nugget I picked up that's actually pretty significant. David Schwartz says a higher price for XRP would help Ripple in several ways. The most obvious benefit to Ripple of an increased price for XRP is that it increases the value of Ripple's XRP. This means that Ripple has a greater ability to incentivize partners and liquidity. It also means that Ripple can raise more revenue by selling XRP. Indirectly, more value almost always means more liquidity and trade volume. XRP already has each of the other characteristics needed to be a good intermediary asset, but it will also be initially limited by the available liquidity. Greater liquidity will give Ripple more flexibility to target larger corridors. Also, to some extent, Ripple's success is limited by people's perception of Ripple's success. If you think Ripple payments technology is going to be the next big thing, you're willing to invest the money and the resources needed to implement and deploy it. If you think Ripple is a scam, you're going to not integrate it or perhaps even look at it, whether it makes sense or not. XRP's price is seen as a measure of Ripple's success or likelihood of their future success. You know what? That's hitting the nail on the head right there. So this whole thing circles back to one simple question. If Ripple wasn't doing what they're doing, would you actually throw your cash at XRP? You know what I mean? Look, I'm not going to sugarcoat it. Yeah, I'm backing XRP because I see real value in the asset itself. But a massive part of that comes down to watching everything Ripple's been crushing it with. I'll be completely honest with you, that team and their 13-year grind, that's basically what pulled me in. Their track record speaks volumes. It is also important that is not to be terribly expensive to hold XRP. A higher price will mean that a similarly sized sell or will produce less volatility. So the higher price could mean a lower cost to hold XRP. So long as that XRP's general price direction is up, the volatility can be hedged without much difficulty. When Bitcoin are sold for $1, you couldn't really use them to buy and sell a house, but you can now. Bigger transactions require bigger value. The higher the price of XRP, the larger the payments Ripple can target. When you're expecting exponential growth, even a smaller increase in your starting point can pay huge dividends down the line. This is precisely why XRP staying super cheap just doesn't add up in the long run. Picture this. We're talking trillions upon trillions in daily payment volume here. So how is that supposed to work with rock bottom pricing? Makes no sense. All right, let me show you what Chris Larsen said. Oh man, that almost escaped right there. I actually had to snatch it back midair. So yeah, Chris Larsen coming in hot. Take a listen.
Is 10 years out on the financial crisis, we still don't have the infrastructure perhaps to prevent the next one. And I think this is where digital assets can really help, because an efficient digital asset can really solve some of the key problems in global liquidity. You know, the world's got trillions and trillions of dollars tied up in liquidity just to get around how clunky the movement of value is around the world. If with a really efficient digital asset, something like XRP, and that's what we believe will be the most efficient, you can now reduce trillions and trillions of capital from being tied up. So you can make those transfers instantly as a bank or as a payment provider or as an enterprise without having to have money pre-positioned all over the world.
The attribute of a healthy liquid market is really resilience, and that is getting at the ability for a market to recover from a significant systemic event.
It's looking like Ripple's been quietly building the financial equivalent of emergency infrastructure. You know, they're positioning themselves for when the next economic chaos hits. And the strategy here is pretty clever. Get XRP embedded into the world's money system so deeply that when banks are gasping for liquidity, boom, it's right there ready to fill that gap. And I'm pretty convinced that's one of the massive underlying plays happening behind the scenes. Several technical differences between XRP, the asset, and any other token on the XRP ledger, besides neutrality being counterparty risk and being prepared for auto bridging. There is more differences for XRP. The native digital assets on the XRP ledger have different technical properties than all other tokens on the XRP ledger. So it's not typically called a token in the context of the XRP ledger. But here are some notable differences. All accounts must hold at least a small amount of XRP in reserve, and must burn small amounts of XRP as gas to pay for sending transactions. XRP is tracked together with accounts on the ledger that can be sent directly from one account to another with no fees beyond the cost of sending the transactions. All accounts can receive XRP from anyone by default, in contrast to tokens, which can then only receive after you've sent a transaction indicating your willingness to hold them. XRP has a fixed precision to 6 decimal points and is represented as an integer drops, such as 1 million drops equals 1 XRP. All XRP was created along with the ledger itself, so no new XRP can be minted. Okay, so we've got David Schwartz jumping back in with more from this conversation. Listen to this.
And Arthur mostly realized that you could have an asset exchange, that you didn't want to have an asset exchange if you had a block producer, because the block producer could reorder transactions to their advantage. They could not, if there was some offer that was at a price that turned out to be too high or too low because the asset price moved, the person who produced the block could take that profit for themselves. They might not let you cancel an offer. They might let you place only the best offers for them and then take them and insert their own transaction to take them. So we realized in 2012 that because you could not do that, our technology was uniquely suitable for an asset exchange. And so we took some inspiration from some work that Ryan Fugger did back in 2004. We created issued assets, which were basically the first stable coins. We created the first DEX with what we now call the DEX. And we built a sort of multi-asset ledger. And the
XRP was basically from the future. That's my take on it. XRP ETF clients pushed a total ETF in assets held to $821 million. We are approaching the $1 billion mark. Bloomberg is reporting that Vanguard will roll out crypto ETF access. So check this out. Vanguard just made a move that's going to shake things up. We're talking about a company with 50 million clients and $10 trillion in assets. That's not a typo, $10 trillion. And they're finally letting people buy crypto ETFs through their platform. Now, here's where it gets interesting. They're not creating some fancy Vanguard branded Bitcoin or XRP fund. Nope, what they're doing is way smarter. They're acting like a gateway, giving their entire client base access to products that already exist. Bitwise Spot XRP ETF, Bitwise Bitcoin, you name it. Imagine 50 million people suddenly having that option at their fingertips. The ripple effect, no pun intended, is going to be absolutely wild. And speaking of interesting moves, Dan Moorhead from Pantera Capital, remember him? The guy who interviewed Brad Garlinghouse in that deep dive? He's been dropping some knowledge about debts lately, and honestly, it's worth hearing. Take a listen to this.
I would say there are great debts and then ones that probably won't work. And not that they're bad. It's just each currency only needs 1 or 2 debts. Maybe you don't need 20 more Bitcoin debts. Michael Saylor's doing a great job. He's got a long-term track record of being good at, his company has a track record of being good at what it's doing. So I would say that I would imagine in the long run, each currency would have only 1 or 2 very well-run, reputable, large DATs, and then the smaller ones will get rolled up.
Digital asset treasuries. That's the technical term for what debts actually represent in this space. So here's a question worth asking. Is Evernorth positioned to become the dominant force for the XRP ledger? Could be. Or maybe we haven't even met the real contender yet. But this closing section really caught my attention because it cuts through all the noise. Ripple doesn't control XRP Ledger. XRP can't be minted, fixed supply, no mining, no validator rewards. XRP existing before Ripple. XRP is public, not private. XRP is decentralized. Know the facts. David breaks down each of these points in detail, and it's definitely worth your time to hear the full explanation. All right, everyone, that's going to do it for this one. Big thanks for spending your time here with me today. If you found this helpful or informative, go ahead and throw a like on it, share it with your network, or let me know what you think in the comments section. Appreciate you watching. See you in the next upload.